That's a bit weird. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Morning, folks. Good to see a few of you up and at it. Welcome along. Morning, Aaron. How are you, mate? Give us a shout out if you're there in the chat. Say hello, say good morning while things are warming up. I'll do the intros, do the little quick intros. Jason Witten's my name. Most of you know that, though. And if you don't, well, you've been either living under a rock or maybe you're new. And if you are new, welcome. Thanks for joining. This is where we get together every weekday, around about 10 past 8, and have a bit of a conversation, a bit of a chat, a coffee chat, wealth coffee chat, matter of fact, about what's going on out in the world of property investing. Lots of interesting things, always lots to talk about. You guys know the drill. Australia loves its real estate, maybe even a little bit obsessed with real estate. You never know. But that's what we do here, being property investing myself over 20 years, coaching property investors as well. Well over 20 as well. So, you know, there you go. Along the way, learnt one or two things and share that with you wonderful people each morning. So good to see you on. Hey, good morning, Kevin. Oh, good morning, Jeff. There we go. Alex is here too. Morning to you. So let's get into the show. I thought we would talk about the idea of flipping today. Who's heard of flipping? Give me a yes in the chat. Who's heard of the idea of flipping or buying and selling? Who's heard of the idea of buying a property and selling it for a profit in a short period of time, making some cash flow out of buying and selling? Who's considered it? Who's thought about it? Who's done it? Maybe put that in the chat if you're hanging around. But the idea that the in and out costs of buying and selling a property are not as, let's say, well understood as they should be. All right, the idea of buying and selling a property, making big chunks of cash from a trade, selling a property, might not be something that been there, done that, Alex. There you go. So let's go through that this morning. I've had a few questions about it. About flipping, does it work? And the answer is yes, it does work. However, folks, we need to understand the costs, the in and the out, the up and the down, the round and the round of making this stuff work. And if you want to make a profit out of buying and selling a property, certainly let's talk about it at small scale. Let's talk small scale as property investors, not a property developer, by the way. There's three costs we need to consider. Now, put it in the chat if you and put the detail in the chat if you think you know what they are. But good morning, Margaret. Good morning to you. Good to see you here. So tell me in the chat, do you know what the costs might be of buying and selling a property? Now, I'm going to lump them in three different buckets or three different sections, but put it in the chat while I'm doing this, right? So there is what I would call in or buying costs, all right? Okay, on the way into a deal, there are costs that you need to consider. Yep, absolutely, Alex. There are what we would call holding costs, right? While you have the property, how long are you holding it? What's it costing you to hold? And then there are out costs. In and out costs, well, that's kind of often the selling costs. Away we go. So let's talk about that, because before we try and analyze a deal, I've got my calculator here and we'll do a little deal in a minute. What are we talking about? What are the in costs? What are the out costs? Now, an agent on the way in. Sometimes there's an agent on the way in, but that's usually the seller's cost. But let's just talk about this in general terms. There is absolutely the solicitor. The solicitor might cost you anywhere from $1,000 to $2,000. There's stamp duty. Who loves a good bit of stamp duty? Hey, no, I don't. Stamp duty on the way in, and there might be, let's call it, folks, maybe some due diligence costs, some pest inspections, some building inspections, whatever it might be. So we might do pest and building, all right, depending on if you're buying a second-hand property, away you go. So that's kind of on the way in, and depending, what are the holding costs, folks? Well, it depends on how long you hold that property. Put it in the chat if you're just joining us. What would be the holding costs? While you're holding that property, it might be a short time, it might be a longer time, but the holding costs, certainly we all know interest while you're holding that property. The other couple is sort of rates, council things, so insurance and et cetera, and maybe some maintenance. But I would be saying maintenance rates and insurance most likely, but maintenance, unless you're holding an older property for a longer time, it might not matter. It might not count, right? So let's have a look at that. And so exit costs, out costs, what's the number one cost there? Well, there's two. Your agent, selling fees, capital gains tax, and maybe some solicitor fees, and number four, like what's called adjustments, right? But they're kind of like part of your holding costs as well, but let's call it adjustments. So, if you're thinking about buying and selling a property to try and make a profit in a short period of time, well, we need to consider all of those things, folks. We need to consider all of those things. And if you think about it here, let's say we're, buying, a run-of-the-mill property. Let's call it $750 to try and do something, or we're going to build a property. I'm going to show you in a minute kind of a little analysis. The in cost, let's call that could be $30K quite easily. Depending on how long you hold it and the cash flow, let's call that another $20K. And certainly over here, depending on how much you sell it for, this capital gains tax, but certainly if you sell it, I'm going to call that another $30K, maybe more, right? So very simply, in the world of, of doing a deal, buy and sell, the in costs and the out costs of a deal, and these are, they do vary a small amount, but not significantly. Even if you said $20K for all of them, and then you go 60, let's say, to 100K, 60 to 90K, the in and out on average of a property if you're trying to flip it. Now that's actually pretty accurate, folks. That's pretty. Now, when do you pay those costs? Some are up front, some are a bit later, et cetera, et cetera. But the true profit of a deal, if you're trying to do one, you've got to analyze it like that. You've got to take it into consideration. Think about those sorts of things. So, when you purchase a property, there's a few things as well. Now, tell me in the chat. Morning, Chris, all the way from Dubbo. Tell me in the chat. Now, capital gains tax. Let's talk about tax. Let's talk about capital gains. And there might be even land tax in there. If you buy and sell a property, let's say capital gains tax, there's some rules around it, right? There's some rules around it. Who knows the capital gains tax rules or understands them? Capital gains tax. Now, there's a couple of benchmarks here, or there's a couple of timelines that give you some benefits when it comes to capital gains tax. Does anyone know what they are? Put that in the chat if you do. Now, I'll tell you what. I'll put it here: 0 to 12 months, and then 12 months and beyond. This is for investment property, okay? Investment property owned in, there's a couple of owned in your name. So personal name, or a company trust structure, okay? So those two things, okay? We're not going to talk about super because super funds don't necessarily trade. So personal name and company name. Does anyone know what the rule is? 0 to 12 months for capital gains tax. Anyone know? Maybe put that in the chat. We'll have a little drink of coffee. What is it? So the capital gains gets added to your income tax. That's right. That's exactly right. So if you make a gain, let's say you made a gain of $100,000, right? In the first 12 months, how much of that is taxable? 100% of the $100,000 goes to your taxable income. Taxable income. Okay? Okay, so 100% of it would be added to your income, and whatever tax level you're at would then you'd pay. Okay? That's how it works. All right? After 12 months, that's for personal name and company trust. Now, this is for investment property. Like I said, remember, investment property. After 12 months, well, it's kind of cool. You only pay tax on 50% of the gain. So you would only pay, you would get a discount, what's called a discount, a capital gains tax discount of 50%. And then only 50K would be added to your taxable income. Taxable income. All good? All right. So that's how it works. Okay. So number one rule is if you buy and sell, preferably you hold it for longer than 12 months. And often most projects are like that. So you can get the 50% discount and pay less capital gains tax. Right. What happens if you're going to buy and sell in under 12 months? What would you do? Now, this is a little bit technical, but, how could you do that? Well, a company, buying in a company, so a PTY Limited, a company. So that company, there's two tax rates for companies. So what's the tax rate for a company, folks? Does anybody know? A trading company. Now, this is where you have a chat to your legal eagles, all right? A trading company that's deemed to be sort of in business, is taxed at 25% flat. 25% flat. Now, depending on how this is owned, right? Owned, because a company ownership doesn't pay capital gains tax or get a capital gains tax calculation. It doesn't qualify for the discount, right? Okay. Trusts and your personal name qualify for the discount. A straight company does not, right? 25%, yep, capital gains tax, or 25% for company tax. Now, there is another rate, which is a 30% for often what's called bucket companies or passive ownership companies. Now, you got to be careful that, when you buy a property, it's not sort of a passive ownership company and then you end up paying 30%, folks. But talk to your accountants and bits and pieces about that, all right? Owned in that way. So, depends on how the company is owned, who the shareholder is. If it's a company trust structure that owns 100% of the company, then, money could flow through and out to the beneficiaries, and you could manage the tax flow that way. Okay. So that's a little bit complicated, a little bit interesting. But when we look at the idea of buying and selling, there's a few things to consider, right? The in and out costs of buying and selling a property. Now, can you make a profit? Capital gains tax is the one that can be make or break. Often a profit, you think, oh, I made 100 grand. I sold the property, I bought it, I made a gain, and I sold the property 100 grand. I'm in the money. Yoo-hoo, you beauty. Well, if we do the math, it might not be that the case, and depends on how you own it, whether it's a company, trust, or your personal name. All right. Well, let's have a quick look. I think we've got a little bit of time. Maybe have a little look at a calculator and thinking about how we might analyze a deal, folks. Analyze a deal and see if we can. There we go. We'll do that. See if we can see stuff. Like here's a little calculator. It depends on what would I buy? What would I buy? If I was to do one of these, I know really well sub-luxury houses. Dakin or Dakin. And I know, and I'm very familiar with southeast Queensland, right, close to Brisbane. And I'll show you this one here. This is an example that we're looking at right now. We've got some very nicely located, good bits of land, and build a really nice house on it. Okay, so this is an example of what you might do. Buy some land for 650. You got to put some money in. That's 195 on the land cost, folks. So sometimes you put the cash in on the land, and then you go ahead and that stamp duty would be a fair bit more than that, I would say. So let's go 25K. All right. I can click on there, but I don't want to do that today. I haven't got time to quickly go to there, but I'm just taking a quick guess. So you put in your costs, other bits and pieces. If you're using cash, I'm using equity, and you put in some holding costs if there's any. And then you go, right, I'm going to take 3 months to get an approval. I'm going to take 6 months to construct it. At the moment, 6 months for construction's probably a bit keen, but I'm just going to chuck that in there. Go and talk to your building. There's cost construction here. One of the cool things about I could go. I won't do that today. You can go and click on that link, and you can go to the construction cost table per square meter on BMT's quantity surveying, which is really good. And they give you an idea, and you go, right, I'm going to build a house for that. I'm going to do landscaping. I've got some other stuff. I got contingency. My total construction cost, is 514,000. So buy a nice piece of land in a luxury area. This is how I would do it. Others do, houses and renovations and whatever. And all I'm saying is, if you're going to do it, you need to understand the cost, the in and out costs, and the calculation, folks, and how you own it. And then, all right. Now, my loan interest on the land is 6%. My construction loan, 6%. Just chuck that in there, muck around with that. And so what I'm doing, if I'm buying and selling property and I'm using my cash or / equity, my $195,000, as an investor, we talk about getting our cash on cash return. Get all 100% of my cash back. And as an amount of the money I invested, what was my return based on, the cash that I had in the deal? Because the deal pays for itself. The whole deal, or the costs, interest, et cetera, taken care of. Can I make it work? Would it work for me? Go down here and I do a sales fee, and maybe I put 1% in there for marketing. I need to make sure I make sure I have an agent doing a good job if I am going to sell it. So, own it for 12 months, construct it, make sure it's looking good, my holding costs, et cetera. And there's some drawdown calculators here. So I think I can sell it for about 1.5. My total cost all up are about 1.321, including all my holding costs. Let's say, for example, including my agent sales fees, I made a profit of $178,000. All right. Now, I haven't paid tax yet, by the way. So just so we know, there's 178 I need to pay tax. So a small profit margin of 12%. These smaller deals I would only do at, I would always make sure I'm making 10 to 15. 15 is a nice number. 10 to 15 on single ones can work. And then bigger developments, duplexes, blocks of 4, that can be, you're looking at, 20 to 30%, folks. And then bigger developments, you're looking at 35 to 40%. You don't want to be, because what happens if I couldn't sell this, folks? What would I do? It's a good looking property. What would I do if I couldn't get it sold in the time frame that I needed? What would I do? What's my sort of backup plan when it comes to, the risk here? Because the risk is quite low on a little project like this, very low. And I could have a bit more, call it aggressive, call it whatever. If I want to be a little bit more bullish on my future with my project, I'm going to put 5% in there. Put 5% for capital growth. And look at this, I made a little profit. And then my cash on cash return, 130% on my cash on cash return. Who'd like the idea of 130% cash on cash return? Folks, what about you? What about me? Yeah, I don't mind that. So that's how you can do it. I still have to pay some tax. 50% of that gain would be taxable. So 253,000, call it, 180 would go to my tax. Then I'd probably end up paying 180. I'd probably end up paying 70 grand in capital gains tax, folks. 70 grand in capital gains tax, so, but still better than the poking over the sharp stick, right? So that's a good little analyzer, a good little simple calculator on, how you might do a project if you are looking for, to make a little tradable cash flow. And for many of us, for many smart investors, when we have our portfolios up and, we've got the acquisition going, sometimes, folks, let's go back here. Sometimes, imagine we did, imagine we could knock it into shape. And let's say over a 15-year period, we could do 4 trading deals to help add extra cash flow. You could absolutely do it as an owner-occupier. You've got to make sure that you follow the rules, Jason, but that's certainly one way to make that happen and make it work for sure, mate. I do know we call that the owner-occupier upgrade strategy. It's a good little strategy, and you can manage your tax properly or well with that within reason. So imagine, you did four little deals. You made 100, and then you made 150, then you made 200, and then you made 250. You could do some little upgrades over time. Yeah, there you go. You never know. Always happens. Hopefully that was useful. Can flipping and doing deals work? Absolutely, but you got to know what the in and out costs as you go. Bits and pieces. Dakin asked the question, what company structures would you buy as company name? Yeah, listen, mate, it's a good question. It's pretty difficult to sort of, answer that, based on not knowing you or any of your situation. But what I would say is, like, are you happy for the company to earn the profit and keep going because you want to do more, right? If you want to, or do you want to extract the money out of the company and then close that company down and not do another one? Like, those two questions are important to ask or to tell your accountant, because they would be smart and tell you, well, if you want to keep going, well, keep the profits in the company and you keep just reinvesting them and growing your trading strategy. Or if you're going to extract it, then I would hazard a guess that they would set up some sort of secondary structure for ownership of that company that would then flow the profits out and give you some flexibility. All right. So good question. Hopefully that was useful, and yeah, go ask your accountant, but tell them what you want to do. Tell them I want to do this or that. Right. So that's important. All right, team. That's it from me. Thanks for joining. Great to see you as always. Let's do it again tomorrow. You guys know the drill. We hang out at about 10 past 8. So if you're around, then let's book it in. Have a date. All right, folks. Adios. Take care. Bye for now. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong live for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.